Hello and welcome to the KE Report. Chad and Corey here, getting an update on Integra Resources. Trade on the TSXV under the ticker ITR and on the NYSE under the ticker ITRG. And we're joined today with the President and CEO of Integra Resources, Jason Kosec. And Jason, it's great to get you on the show for an update. It's been too long, man. It's been since November of last year since we've chatted, and a lot has happened with the company. But some big news out that you have acquired the Florida Canyon mine in Nevada out of the spin out of Argonaut's assets into a couple different companies. But you picked up this mine in Nevada, which we've been following on the show for a while, back since it was with Rypatch and Alio and then in Argonaut. So nice to see it in good hands. And for people listening in, just as a reminder, Integra Resources already had 6 to 7 million ounces of gold in the Great Basin between Idaho and Nevada. And we were joking with you, Jason, off mic that when we first started talking, you were in the exploration phase, then the development phase. Now you've entered the production phase. So you've graduated up out of each bucket, and it puts Integra really into a new state now. And it's a transitional acquisition for the company. Walk us through the key details of this picking up of the Florida Canyon mine.
Yeah, thanks for having me on again. Much appreciated, guys, and thanks for your listeners for joining in. Since we talked back in millennial days and then Integra, call it 2.0 days, the vision has never changed. And I told you this right from the beginning, like these are the building blocks to build an intermediate heap leach focus gold silver company in the Great Basin. So we did the merger with Integra and Millennial, making us one of the largest gold and silver resource endowments not owned by a major. You know, George and I and our team have been looking for a producing asset for quite some time now. We've looked in the last 2 years, we've looked at over 70 projects and done about 15 site trips looking at production. And frankly, nothing really got us excited. We believe in disciplined risk taking to maximize shareholder value. Mining is a risky business that we all know that. So when we move on something, we have to have conviction. And frankly, we have pretty strong conviction that Florida Canyon and their management team, led by Greg Robinson, can really execute this turnaround. We looked at it a year ago and it was turning the corner and it wasn't for sale. Obviously, then Alamos came in and it became for sale. So we took another look at it. It was a well-run process for 2.5 months. It was quite competitive. But I think what set us apart from everyone else was frankly that it sits best in the Integra portfolio because now with Florida Canyon, DeLamar, and Nevada North, you have 20 plus years of mining in that mining hub. And you have 10.2 million ounces and a production story that's going from 70 to 250,000 ounces in the next 5 years. So it's a really exciting time for Florida Canyon shareholders and Integra shareholders.
Jason, can you give us some more insights on the production profile just at Florida Canyon? Then there was an April 2024 technical report release that outlined a 7-year mine life, around 70,000 ounces of gold equivalent per year. What can you tell us about any sort of costs, estimates, any sort of growth plans? What can you give us more information on the production profile, please?
Yeah, for now, I'm going to refer everyone to the technical report that we believe in. Those are live numbers. It was done July of this year. We have a lot of confidence in those numbers. So what it now looks like is a 7-year mine life. Life of mine, AISC 1525. Of the 7 years, there's another 3 years of residual leaching, so call it 10 years. It's steady state at 70,000. They increased production in 23. Greg and the team increased it by 43%. It's very consistent throughout the mine life. Okay. We're quite confident in those numbers. Increasing production, I'm not going to start speculating on that. There are some optimization studies to be completed that could potentially lower costs. But again, all that work is ongoing. And you can look at the technical report, but 25, 26, you're looking at 1900, and then 27 onwards looking at 1600. And the reason the drop off is because the strip in 25 and 26 is 1.2, 1.2, and 27 it drops to 0.6, which obviously lowers your costs because 30% of your cost is fuel. So you're hauling more waste, and the other 30% is people. So reducing that obviously has a positive impact on your costs. So that's all I'll say on that one. And people can take a look at the technical report, and I encourage them to do so. And we will be putting out formal guidance once we get the keys in middle of October. So we'll do our budgets and stuff like that. So we will most likely have our guidance out by the end of the year.
Well, Jason, I'd like you to take a moment and just unpack, because there's a lot of people that think, oh gosh, here comes another junior developer explorer that's going to go into production. But this is a little different scenario in that you're not starting this mine up from scratch. And the team that's in place, really being run by Greg Robinson, the general manager there, and a lot of the other staff that remained on point, they've been running this mine successfully and really turned operations around. So I'd love you to speak to the team that's in place operating the mine, and also all of the work that's been done previously by Argonaut to get this ship turned around before you guys take the keys.
Yeah, no, I think they did a great job. One way you can look at the health of the mine is look at the voluntary turnover rate. And last year when Greg had a full year, he dropped the previous years of almost 32% in 2020, dropped the turnover rate to about 4 or 5%. So there's a significant turnaround. So he's 25 plus year mining engineer focused on heap leach with an MBA. He's a solid guy, and they have a solid team at site. We fully agree and with that. And like I said, we have all the confidence in the world in him. And we still have Scott Olson, who's 17 years running Bald Mountain for Barrick and Kinross. He's a metallurgist by trade, doing heap leach optimization his whole career. And we also have Raphael Dutot, who's a PhD in strategic mine planning, he was there running Mosabel and Essakane, one of the best producers for iron gold. So I frankly have a lot of confidence in our team to execute the longer term vision.
There any major costs that investors need to be aware of, either growth or simply development costs at Florida Canyon when you take over?
Yeah, so the major item was about, call it around $50 million was put in 2024. When we take the keys, I think there's about $1.5 million left to spend. What that cost was the pad expansion to create pad 3A, the new CIC, and then some truck buyouts. 25, 26, and 27, you're looking around 20 million a year, and that's pad expansion, truck refurb, and truck buyouts. So again, it's all in the technical report. So once we get more comfortable with the asset, we'll put out formal guidance, refined numbers. But I think the report does a good job outlining.
So I guess talking to the financing part of it, there is this credit facility that was also announced, an amendment to it down at the bottom of that news release. Is this used just as kind of working capital here to make sure everything's running okay at the mine?
Yeah, so general working capital purposes is the added draw there. We are doing like I said, the $20 million financing that went very well. Beatty, Wheaton, GMT, Franklin, Ruffer were all big supporters. So what we're using that capital for is doing some optimization and trade-off studies, a little bit of exploration to extend the mine life, and potentially look at the sulfides. But all of that work is ongoing, so I don't want to comment too much on that. I rather under promise and over deliver, especially with a producing asset.
Well, Jason, we'll keep tabs on it, but it's an exciting time for the company to take over this asset. And like you say, you still see the opportunity to potentially even upsize it further and extend the mine life. So we'll keep following along, but it's going to be an interesting road to haul here where you got production coming in. And I'd love you to speak to how, now that you can be a producing asset, how that acts like a sort of ATM machine for the company to bring in revenues that you can then reinvest into your other two projects at DeLamar and at Nevada North. So just explain the strategic importance of being a producer and how that really funds the operations moving forward.
Yeah, so the way we look at it is Florida Canyon is really the matchstick that unlocks $1 billion of development NAV between Nevada North and DeLamar, right? And people got to understand that to move these projects, Nevada North and DeLamar, along, you're looking at $15 million a year. Okay. So we don't envision going back to the market because Florida Canyon will generate enough free cash flow to pay for DeLamar and to pay for Nevada North. It's not going to offset the bill that DeLamar a lot, but it could offset some. But the reality is that if you want to own this now, you have to go in the market and buy it. And a lot of the reasons why exploration and development companies, okay, you could have a major new discovery. The success rate is 1 in 10,000. That's the way. But when you're going through the development exploration phase, everyone knows you're coming to the market every year for 10 to 15 million. So you're never going to get a re-rate. What we see here is that you are going to get a producer re-rate. It's a show me story. So I understand it's going to take some time. That's okay. But you're going to get that producer re-rate and you have the $1 billion of NAV sitting right behind you. So you have this beautiful built-in growth pipeline that can get you up to intermediate status in the next 5 years. And all of these projects, from Nevada North on top of the hill, you can see the Florida Canyon pit. And DeLamar is, 3 hours away.
Well, Jason, let's dig in a little bit to DeLamar in Idaho. This is a big development project for the company. You got about 4.8 million ounces of gold equivalent at the project, and it's a monster project on its own right. Just give us an update on where things are at as far as development work there, permitting, any update you got for us at DeLamar.
Yeah, DeLamar is still our flagship project. It's going to do close to 140,000 ounces. When you bake in the stockpiles that we just drilled off, should have a mine life around 10, 11 years. So that will have a feasibility out by Q4 of this year. One of the things this year, a major milestone is the MPO has been signed and it's been deemed complete on the state level. So what they're doing is they're preparing their notice of intent document to go to Washington, and the phase 2 rule, which basically holds the permitting agency, the BLM, the Department of Interior, held accountable to a 2-year permitting clock. So, we understand it's an election year. So, what the state has guided us on is a record of decision in Q4 of 26. Now, can it slip to H1 of 27? Possibly. It's an election year, and obviously, depending on how that goes, it could slip, but it's going to be Q4 of 26 or H1 of 27, and I'm not going to guarantee where it's going to come, but it will be that. And frankly, DeLamar is a brownfield site. It's a restart of an existing mine. 90% of the resources on private land. It's all BLM, no Forest Service. We don't have a mill, so no wet tailings. There's no major waterways where salmon, trout are breeding in or people are fly fishing in. It's frankly, it's like permitting a mine in Nevada.
What other news could we see out of DeLamar? I see that a feasibility study is ongoing. The most recent economics we had was a 2022 pre-feasibility study.
Yeah, so we will have that feasibility out. That's the major item, and potentially getting the notice of intent signed. That would be a major milestone for sure. And those are really the big deliverables for DeLamar in 24.
Well, and just before we move on to Nevada North, just one more comment on the Idaho property. You still have so much exploration upside there, Jason. We've talked in the past with both you and George about all the other targets you still have. So maybe just give people a quick snapshot for a minute of all the exploration upside that's still there down the road.
Yeah, there's a ton of exploration potential. You got to remember that DeLamar has been, a mining district since 1888. Okay. And in that phase 1, it was very focused on these high grade veins that sit below DeLamar and sit below Florida Mountain. The average grade was 30 gram per ton. Their cutoff was 15 gram per ton. And their average mining width was 1 to 5 meters on these veins. And then there was obviously Kinross had it and they were doing their open pit bulk tonnage situation. And then obviously we took it and now it's an open pit heap leach project. But the veins that are under there, today the average underground width and grade, average grade is like 3.85, average width is like 2. So when your cutoff grade was 15 gram and the vein widths were 1 to 5, there's still a ton of potential that exists at DeLamar.
Let's move over to the Nevada North asset then. This comprised the Wildcat and Mountain View deposits. This is in northwestern Nevada. There's a drill program underway here. Take us through what sort of news we can expect out of Nevada North.
Yeah, so drill program's about halfway done. The main focus for this program was threefold. Was one, to show some expansion of the right at surface oxide. The other part of the program was to do some resource conversion in the pit and to get some more met material. And then the last phase of the program, which frankly I was most excited about, is testing our conceptual hypothesis, and that the mineralization goes below these post-mineral basalts. And we believe that the main feeder is under these post-mineral basalts. So there's a potential to have a brand new discovery. The core looks great, but at the end of the day, the lab tells you whether it's great or not, unfortunately. But I could definitely say it was a technical success, and we should have, results coming out in the next kind of month and a half, and then we'll be releasing them right into the fall.
Well, and Jason, we've been talking about these two projects, which is now one larger project, Nevada North, but Mountain View and Wildcat with you for a couple of years now. Just remind people of the resources that are already there in place. And I guess tie it into the point you made at the very beginning of this call that you now have over 10 million ounces of gold equivalent. The valuation Integra gets for all three of these projects combined now is only a fraction of where it should be if you look at peer comparison. So just walk us through what's at Nevada North, but also the overall valuation based on the ounces you have in the ground today.
Yeah, so both the PEA for Nevada North is a very robust PEA. Most PEAs are about 20% indicated, okay? Nevada North PEA is 80% indicated, and the conversion rate is 87 to 90% on a tonnage and ounces basis. So right now, there's, call it 1.35 million ounces there, a million ounces payable, and that drives the 490 million NPV and 54% IRR at $2,000 gold. Okay, so we still see, we were operating on a little small 5-acre permit. Now we're moving to a much larger permit, which will give us 400 acres of disturbance. So the growth potential there is significant, along with DeLamar. So now that you have a producing asset that we don't envision going back to the market, especially in these metal prices, that'll allow us to move our Nevada North and DeLamar project along. And now that you're a much bigger company, you have production, and significantly lowers your cost of capital when you start building DeLamar. And with this transaction, we inherited a really good workforce. And finding a workforce that specializes in open pit heap leach is quite challenging in a very competitive work environment. So all in all, we're happy with where we're at.
So just to reiterate, as this deal is closing and as you're moving into being a junior producer, will you need to slow down, at least temporarily, any of the work at DeLamar or Nevada North? Or can everything move together at its current rate, even while you bring in this producing asset?
We will continue at our current rates, full steam ahead. Like I said, Greg and his team at site, that's basically a self-sustaining business on its own. And we will keep pushing along Nevada and keep pushing along DeLamar. We're not taking our foot off the gas pedal at all here. Like it says in the strategy of our company, we believe in rapid project advancement, disciplined risk taking to maximize shareholder value to becoming an intermediate producer.
Jason, I'd just like you to wrap us up today with just kind of a final thought on where things are going as a company as far as the valuation. You've got a couple slides in your deck that talk about, the size of your resource, the price to NAV, all these different things. And the knock against Integra is usually, well, look at their valuation. It's so low. Could you speak to the valuation and where you think this company could re-rate up to?
Yeah, all developers trade roughly around 0.15, point 0.2, right? And the reason why is because everyone knows you're coming to the market every year for $15 million. It's really tough to get a re-rate, to be quite honest. Now you're bringing in production. So call it junior producers trade between zero point 0.5 and zero point 0.7, some higher, depending on the margin. You could argue that, okay, a lot of the $1.2 billion of NAV we have now, it's development NAV. But I think, trading at zero point 0.5 to zero point 0.7 is where this thing is going. And when that happens, what will subsequently happen to that is you will most likely be included into the GDXJ. And that'll be a big win for anyone who gets in front of that inclusion.
All right. Well, a lot of news flow on tap for Integra Resources for the next couple of years, but even in the next couple of months. So we're going to follow along and get you back on more often, Jason, just to give us some updates, especially when some of those exploration results come in from Nevada North and as you eventually take over the keys in the next couple of months to the Florida Canyon mine. But if people want to follow along with the news flow at Integra Resources, you can click on the link below this interview. It takes you right over to the company website, straight to their news section. And Jason, looking forward to our next conversation.
Awesome. Well, thanks a lot for having me on. Really appreciate it, guys.